morning. Good morning, everybody. I'm Ralf Fletcher, and welcome to today's masterclass. We're just waiting for people to enter. I'm sitting in sunny Cape Town. It's cold but sunny. So, Dr. Terence, are you in Johannesburg?
I'm in Johannesburg. It's slightly warmer today, also very sunny, but there is still a bit of a nip in the air, I must say.
Yeah, it's still here. So please let us know in the chat, where are you and what organization you from, whereabouts are you situated. Let us know, introduce yourselves. I'm going to be starting very shortly, so it gives you a couple of seconds just to introduce yourselves, where you're from, and we can get started fairly quickly. Today we are having a masterclass organized by Topco through our Top Empowerment program and in partnership with Nedbank. So Nedbank was our sponsor of the Top Empowerment Conference and Awards, which was 2 weeks ago now. So we had, I think, about 700 or 800 people at the awards and about a very similar amount at the conference. So today's masterclass is around mechanisms for strengthening Africa's resilience to global shocks. And I think, most dinner parties at the moment, we couldn't be more relevant because anywhere I go at the moment, this is a question that's coming up by business leaders, by organizations, and really, we're very, very fortunate to be partnering with Nedbank, who have insight not just in South Africa, but onto the continent. So, a little bit about me. I'm the CEO of Topco Media. I run a podcast called Business Unusual, where we interview amazing guests. I think we did Dr. Matthews Poser last week. So, really it's around understanding what organizations are doing to thrive in these challenging times, and what makes great organizations and leaders. We have a number of programs, but really our goal is to inspire the world to do good business. I think there's a number of people who are scratching their heads at different situations, but there's always somebody or an organization that's excelling. And so, what are they doing, how they're doing it, and what can we learn from it? Not everybody has the same resources as these big organizations, but what are the practical insights and things that they can do? Topco's been in business for over 25 years. We work with the top sort of 1,000 organizations in South Africa. We have many programs. I mentioned one of them was Top Empowerment Conference Awards and the publication. We do the National Business Awards. We do Public Sector Leaders, the Future of Sustainability, Africa Tech Week, Future HR, Top 500 Best Managed Companies. So we really talk to business leaders and organizations who are looking to thrive and looking to do business on the continent. And so we have, a plethora of insights from these business leaders, like the one our guest today. These are some of the organizations that we've profiled on the cover of these different publications. So, we're very fortunate to have with us today Dr. Terence Sibiya, who's the Group Managing Executive for Nedbank Africa Regions. I saw Terence 2 weeks ago at the conference. He was there meeting people, talking, even at the awards. And really, is a man whose career has been dedicated to unlocking the potential of African economies. He's navigated high stakes geopolitical shifts, helped finance the industries that feed and power nations, and champion strategies that turn external shocks into engines for growth. So today we want to try and create a bit of a playbook of practical steps that and these are battle tested steps that both organizations and leaders can help to navigate with the face of these global uncertainty, from the impact of changing US tariffs to the AFTA and building supply chains. So if you're ready to stop playing defense and really unlocking value, I'd like to welcome our special guest, Dr. Terence Sibiya. Welcome,
Yes, good morning,
Terence.
Ralf. Thank you. Thank you for having me. Much appreciated. Thank you.
Pleasure. I mean, we've got, I suppose, lots to go through, and things are changing all the time. So, we're going to be doing a number of things on the masterclass today. One of them is we're going to be sending out some polls. If you guys can go through those polls and answer it. Um, Dr. Sibiya is going to be presenting some slides as well, some practical insights for you. You will have a chance to ask questions, and I would encourage you to do that. And that's not in the chat, that's in the Q&A. So if you can look at the bottom of the tab, there's a Q&A, and if you have any questions, we will go through that at the end. So bear with us while we go through the presentation. And then if you've got any questions, please go through that at the end, and we'll be happy to answer and go through as many of those as we can. So if we want to start the presentation, Alex, that would be great. Over to you.
Thank you. Thank you, Ralf, and thanks for having me. I think it's important, first of all, that we just sort of set the scene, and thank you for having us. And the partnership with yourselves is indeed a strong one, a long and tested one, and we appreciate partnering with Topco and appreciate the opportunity to also have this chat and this masterclass this morning. So much appreciated. And again, the choice of topic couldn't have been more timely given where we are and the global dislocation that we're seeing, the geopolitical dislocation that invariably impacts us as Africans, us as practitioners in the African economies across the continent. And it has brought about the question how we then build resilience. And you mentioned a nice word, polycrisis. And polycrisis, as we all know, in its by definition, means when there's simultaneous occurrence of multiple, sometimes interconnected crises that somehow amplify each other's negative effects. So we have this confluence of issues that are happening geopolitically that have somehow confluenced and have created a situation that, given the sum of the parts, is quite severe for the continent, let alone other geopolitical issues going on across the world. So if we can just move on to the next slide. Against that backdrop, then what are we seeing happening around the world? This polycrisis threatening us as African economies, but also as opportunity, and we'll get that to that soon. But if we look at Russia and Ukraine, I know we don't see much about it in the news anymore. Occasionally, it's superseded by the occasional announcements, whether it's tariffs or deals are being struck with leaders across the globe, with one man in the main. But the Russia-Ukraine issue persists, and it does seem like it's been somewhat pushed to the background, but it's still there and it's still raging. And in a way, inadvertently impacting some of the global negotiations, because it does have quite a disruptive element, in particular around the supply of basics like grains, in the main wheat, and then also, of course, gas to a large part of Europe. So while it might seem forgotten, it is still there, and it does play itself out indirectly, and in some cases directly, even in some of the commodity prices that we are experiencing. Of course, we are all aware Gaza-Israel issue is a massive global disruptive element, and that also has an impact on global supply chains. And it does impact elements of what we don't experience directly as Africans, but are in many cases impacted negatively about the movement of goods and services that ultimately come to our shores at a price. So that means you'll see increased insurance costs, you'll see delayed imports at times, and then obviously sometimes ultimately access to markets is constrained. Globally, we've got two super giants, China and the US, fighting it out really playing chicken with each other. You know, you give me one tariff, I'll give you one. You give me, I'm manufacturing microchips, and this is what you're going to pay. No, I'm not going to pay that, but then, okay, let's talk. So while that's going on, you've got two of the global economies of the world going head to head. And who knows how that will play out? What we do know is that these are two critical players, two critical markets, and their inability to synchronize or find each other does cause fragmentation, and it poses a very big threat to trade, global trade, and volatility therein. So that in itself, while we might become the ham in the sandwich, get caught in between, almost literally, even geographically, we get sandwiched in between. This is important enough to pay attention to in terms of US and China relations. Closer to home, across the continent, we've seen our own political instability in many parts of the continent. The Sahel is well documented. We now know that there are some countries that have broken away from what was established regional economic trading blocs, and they've got good reason for doing so. They have their own political roadmap that they have chosen to follow. And it does cause, in many cases, some disruption, again, in flows, market disruption, as well as disintermediation in some senses, particularly when it comes to commodity trade. And we'll see that in time that should normalize, but as it stands, we cannot ignore it. Similarly, much closer to home, we have a massive opportunity in Mozambique, for instance, with liquefied natural gas, oil and gas potentially underdeveloped, but has the potential to completely transform the economy of Mozambique and the sub-region. But because of insurgencies in the central and northern part, we've seen a force majeure from Total Energies, the biggest developer currently, and hopefully that will change soon. So we cannot ignore the regional instability insofar as it also forming a part and contributing to what we've identified as this wonderful word, polycrisis, Ralf.
Yeah, I mean, I can't help but think when all these things you're mentioning is that for our business, certainly we had to reimagine a new world when COVID came about, and we saw opportunities in the most devastating situations. We changed a lot of things. And is it the boiling frog? Is it that some people aren't changing quickly enough? And so I suppose the question is, how should business leaders reframe this moment, not just as a challenge, but maybe as a once in a generation opportunity to gain competitive advantage?
Yeah, that's a very good question. And perhaps we can look at it, if we go to the next slide, with some element of what this means at a macro level, and then perhaps some sectors that are perhaps needing to pivot and show some agility at this time, presenting opportunity. Well, at a macro level, literally we've seen currencies collapse. We've seen the Naira, we've seen the cedi collapse, and many others across the continent because of their dependency on specific exports and also perhaps declining investor confidence because of their dependencies on single commodity trade, for instance. So you'll find that many economies across the continent are import driven. And so these disrupted supply chains then mean that there's higher transport costs, there's costlier fuel inputs, raw materials, and purchasing power is eroded with a collapsed currency. And then there's debt distress. And you'll see that many countries are at the edge of sovereign debt crises. Definitely, Ghana saw a big sovereign default, which they have somewhat navigated out of, but still very tense. Others were also in a similar bucket and were able to avoid, but not without help from global FDIs like the IMF, World Bank, etc. So that at a macro level means you sitting in one of these countries, perhaps in one of the sectors, whether it's manufacturing, agriculture, or trade, have to now look at the world slightly differently because of this disintermediation and also perhaps the disruption in the supply chain, the logistics, and the price of getting your good to market, a market which perhaps was long established but now is disrupted because all of a sudden your export route is not what you thought it was. All of a sudden your market is not going to get preferential tariff treatment insofar as your export or your export product will be. So to cut it a long story short, Ralf, I think as a business leader, at this point, you are almost duty bound to look at your own efficiencies and how your business is set up for a new world order. Where your markets, your traditional markets might not be there anymore, or access to those markets is disrupted, and therefore the input costs are going to be higher. And then perhaps secondly, to look at how your business evolves in the light of a global macro that has invariably introduced a level of complexity, cost, inflationary pressures, and to the extent necessary, even political instability that you now need to operate in.
I mean, it sort of tells me one or two things. I mean, I was speaking to the DTIC at the conference, and I asked them, what is the opportunity, or what is the challenge you're facing? And they said that they are really wanting to strengthen the relationship with the top 100 exporters internationally and find them new markets. And it's about how do they do that? How do they show what they've done in South Africa and export it internationally and position themselves for these new markets? But I suppose the other one is innovation, is how organizations innovating through this time. But how much of a opportunity is now this market of Africa? We've been talking about the new frontier. Is that the biggest opportunity that we face, is to doing trade with ourselves? I saw last year that Africa trade went up by 12.4%, into Africa trade to $220 billion.
Absolutely. So if we look at the continent, the population, the young population, median population of 20 years old, talking about 1.3 billion people, and you have relatively under serviced sectors or underdeveloped sectors, manufacturing, roads, logistics, ports, roads, rail. The opportunity is huge, and this is an opportunity. This polycrisis has given us, perhaps, whether we like it or not, the opportunity to really introspect as Africans. And I'm going to use Africans generously. I know we are all different, and we have our own nuances and local realities. And so for the purposes of our chat, I'll use African quite generously and in general terms. Notwithstanding that we do have SADC, we have ECOWAS, we've got the Northern Trading Partners. So this opportunity is huge for us. It's a wake-up call, if you will. Perhaps maybe one way to one place to start would be to look at AGOA, given this new US tariff regime that we now see. Many of us will recall that AGOA was first enacted in 2000 by President Bill Clinton. And this was over and above what already existed somewhat through the US Trade Department as the general system of preferences. So AGOA came along and said, look, we are going to give specific markets, as long as we can get our heads around the rules of origin, specific products that the US needs. These are the countries that will receive tariff-free or duty-free preferential access to the US market. 2000. So it was almost bound 25 years later to be re-looked at. I know it's a function of maybe who's in charge now, and I won't dwell too much on that, on the individual, but just in general terms, over a period of time, we have to ask, the ideal of allowing, of GOA being an instrument to boost sub-Saharan trade and development of our own markets by giving us this preferential access to the market, has it worked? Is the fundamental question we should be asking right now. Should we be surprised that this is happening? Have we done enough over the years when we had these preferential arrangements? Have we done enough to deepen our own markets, develop them, develop core manufacturing bases, developing the infrastructure of getting products from A to B, from Cape to Cairo, from Nairobi to Lagos? Have we done enough? And I dare say the answer is probably not. And hence now we find ourselves in a position where we have to really use what you've said as the AFCFTA, and we'll speak about that in a little bit now, as potentially the only instrument at our disposal to help us pivot, given the global dislocation that we've spoken about.
So, I mean, for business leaders, is this and also a realization that there are opportunities, but at the same time, managing these type of opportunities that we had before and into the future, where there is tariff reductions, is to not run your business based on it, but to use those reductions in costs to reinvest in your business in other areas, essentially, to use the advantages being given to you, not to necessarily profit from it, but to reinvest in new areas?
Yes, you're absolutely right. So one of the key issues, and I'll take South Africa as an example, since we are broadcasting in South Africa, there's been huge, particular angst around the tariffs and the impact on the agricultural sector. And I apologize in advance if anybody's from there, but I'm going to pick on the agricultural sector of South Africa, which has an opportunity to export onto the continent. However, I'm not completely convinced that agri-export into Africa will be that easy. We all know that particularly fruits and wines and other agricultural products require specific and somewhat tailor-made trade infrastructure from getting to point A to point B. Typically, it's road, rail, ports that become critical in the supply chain. Now, we know that in many of the countries across the continent, that infrastructure is underdeveloped. So yes, there's a massive opportunity in that respect to develop the infrastructure, roads, rail, ports, and logistics for us to get product from point A to point B. And in the absence of those key elements of the supply chain, it'll not be easy for the agricultural sector in South Africa just to pivot into a new market. It might still be easier for them to look outwards, to look east, perhaps towards the BRIC countries, India, China, and then to South America as well, because that is a ship and it's gone. And the ship is and those routes are relatively developed. Intra-Africa trade, while it might be a 450 billion opportunity now with all the sectors, the infrastructure to deepen those markets simply isn't there. And so in as much as you might want to pivot internally, use innovation in your own companies, the reality is the go-to-market strategies will need to be developed still. And that requires then a much bigger look at how the economy, the government's policy certainty all come together to deepen those markets.
It's so interesting, eh? So essentially go for active markets that are relevant right now, that are essentially neutral or positive towards South Africa as well. And organizations that are doing that, what are you seeing? What are you seeing as the sort of the actions that they're incorporating? Are they going out with trade? I know that you take trade missions to those sort of places. Is it about that? Is it joining trade missions? Is it joining the Wescos of the world? What can they do practically to take on this opportunity?
Yeah, practically, there are a number of key levers that need to work in harmony. for all this to come together. So, for instance, you mentioned OESCRO. There are many trade investment and trade promotion agencies across the continent. Almost every country will have some kind of trade promotion agency or trade and investment chamber or of sorts, or some kind of coordinating body. And mostly those end up being lobby groups to get governments to put in place enabling policies, which then begins to drift into some of the non-tariff barriers that we would still face on the continent. So these agencies play a critical role in pressuring the various governments, overcoming some of the policy uncertainty and helping input into some of the enabling policies for trade. Take, for instance, your various, like say a state and a promotion agency like OESCRO, to talk to its counterparts in Kenya, in Mozambique, and the eastern side of the continent, to ensure that the non-tariff barriers are removed, if anything, harmonized between, say, South Africa, Mozambique, Tanzania to Kenya, to get commodities to flow, whether it is soft or hard commodities to flow. So those become critical. Now, AfCFTA is addressing a whole number of those, but there are still many to overcome. I think the signatories of AfCFTA are now 54 countries odd, but are their policies now in harmony? Are their trade policies now talking to each other? Have we been able to remove the corruption? Have we been able to remove the other non-tariff barriers that are hindering intra-African trade? So there's a lot of work to be done, Ralf, in that case, but you're spot on. These trade promotion agencies, governments, and I'm often amazed at every country I've been to, and I've been to most African countries, as you can imagine, by virtue of what I do. And every country has a vision of some sort, Vision 2030, Vision 2035, vision that, vision this. And at the heart of that vision is almost always trade with other African countries. But that's the most, unfortunately, at this point, the least developed. I'll just say also critical for private sector to play a role. Governments, in my view, are the enabler for private sector to thrive. And you allow private sector to contribute, including banks, and we'll get to banks shortly, I'm sure, including SMEs, including mid-sized corporates. Those are the engines of the economy, while in many cases, the biggest businesses in each country tend to be the state, because of their purchasing power and also their enabling ability for trade.
Yeah, I mean, I suppose that was going to be one of the questions that I was going to ask you, is the role now on business and business leaders to become almost active citizens and to use the power, the leverage that they have and their voting and to the maximum level. It means that we need to all stand up and not just be reliant on politicians, but businesses need to find a way to be involved and to take action.
Yes, absolutely. But to take maybe a small step back, we must acknowledge the history and the reality of many African countries through colonization, and where many find themselves in various stages of development towards their visions and towards becoming second, first world countries. The reality is that, by and large, most African countries are political economies. And by that, I mean the government still is the biggest business of the day. And in many cases, in many small economies, government is the business.
Mm-hmm.
So we have to be cognizant of the varying levels of privatization in many instances. And being cognizant of that, we have to accept that the role of the private sector will also vary from country to country. In South Africa, for instance, a slightly more developed country, we find the business voice through the various business organizations like BLSA, BUSA, BMF, and many organizations that do play a private sector role. And when it does works well for the general economy in South Africa, there's a lot of issues still to be worked through, even in a case like South Africa. But in many countries, we have to work through the governments, and the investor community, typically mid-sized to large corporates, play a crucial role in lobbying some of the governments to allow private sector development and private sector work. And of course, there are elements or arms of the African Development Bank, for instance, or Afro-Exim Bank, that are focused on development of private sector participation in many of these economies to get projects done. And it's through that kind of lever. African Development Bank, so these are sort of our development finance institutions, private sectors like the Nedbanks of the world, playing a crucial role with manufacturers, mining houses, as well as other infrastructure players, construction, and other key players, key sectors, key development and productive sectors playing a role that makes these economies work.
And how important is public-private partnership experience? Because it seems that to move into Africa, to develop Africa, it's gonna, because of the fact that government is the business in some countries, is that then talks to then public-private partnerships being so important there, but reputation to work with these organizations, these governments, is also fundamental, because they're going to look at your track record, they're going to look at what else you've done in other countries or even in your own country. How important is that for maybe organizations to look at our government and look at ways that they can also work together with it to demonstrate they have that experience?
They are crucial. Public-private partnerships are crucial, Ralf, and to the audience. We've seen an example in South Africa, for instance, of how the PPP model has worked when it comes to renewable energy. Again, maybe it was visited upon us because we found ourselves in an energy crisis, but through the renewable energy feed-in tariff process, we were able to develop the renewable energy sector quite significantly through the various rounds of allocation to various energy, to the various energy mix that we now see in South Africa, and the relative stability that we now see, where we do have Eskom perhaps as a key role player, state-owned entity, but many, many other players now coming through in terms of providing energy to the grid in the various forms of wind, solar, hydro, and more lately battery storage is developing as well. So this is a shining example of where PPPs work. In many cases, that still needs to be developed in many countries. So we have an example where it's worked. Perhaps we could also make the similar models work for our water crisis that's upon us already. And you'll find similar fertile ground in many economies across the world where where public and private partnerships could play a more significant role.
Cool. I'm just wondering if we can launch some of these polls quickly, but also maybe move on to the next slide for Terence. Yeah. Yeah, I mean, just some of the things that we've covered, I suppose, just getting some insight from the audience and what's important and what's more important to them. That definitely helps us to understand where you're at and where you're sitting, so we can obviously try and answer some of these challenges. I don't know if you want to go into the next slide around the policy shift background.
Yeah, I suppose now we could think about what do we do about this? What do these economies have at their disposal as a strategic response, Ralf?
Yeah. I mean, we spoke earlier. There's information that the tariffs are changing all the time, but I mean, how does an organization manage this, I suppose, risk that we're looking at markets like the US and the tariffs going up, and I suppose, worst case scenario, we're thinking, well, we're going to lose a big market share to it. But, I was saying to you earlier that South Africa's had this sort of pressure when we buy international goods for many years, if it be a car, if it be something that's imported, and we pay it. We understand that and we pay it reluctantly. And is that something that we've got to take into consideration, that maybe there is going to be a shift in the mindset of the US citizens around some of our products, and they're still going to be wanting it? Or how do you think people should be navigating this?
That's a very good question. I think with the reset of the global trade regiment, I think from the perspective of an American, it's going to be a bit of a shock when they now have to pay up for a good or a service that is imported from another country. Whereas in the case of sub-Saharan Africa in the main, we're kind of used to this. Most things had a premium. And most goods and services, most of our economies are import driven, and importing from such countries as the US, China, India, and Europe in the main. So there is a bit of an adjusting that the American consumer is going to go through. But my focus is not the American consumer for our purposes. It's how we deepen the African market so that we ourselves can develop them and, in a sense, make our own prices, excluding, in spite of our ability to export to other countries. So we still got that challenge for us. And it is more what do we now do? How do we use policy and diplomacy, for instance, to use the multilateral agencies, for instance, like the African Union, AfCFTA, and for that matter, even the WTO, to sort of push for equitable, free, and fair trade policies that dissolve some of these tariff and non-tariff barriers that are impeding the development of our economies and the GDPs of our economies. So as we look at diversification of our own trade, how do we reduce this over-reliance on Western economies? How do we steadily and make sure that our currencies are not exposed to the volatility of global currencies, whereas within and amongst ourselves, there really shouldn't be that much volatility in the markets we're trading in. So we need to start looking at that. And then perhaps, I suppose, the overarching AfCFTA will eventually challenge how we look at our own regional trading blocks. In the case of SADC, for instance, with the Southern African Development Community, and another population of 350 million, but doing very little trade with each other, before we even get to the East African Community, another regional trading bloc, before we get to ECOWAS, another regional trading bloc, who are still experiencing their own tariff and non-tariff barriers and harmonization. Before we even then layer it with the AfCFTA, we need to know we need to use such levers as policy review and diplomacy to enable this trade.
Is there a sense in your mind that there's some review about women are better investors than men, and they research a whole lot of people, and what they found is the reason for that is they outperform men by 2%, and they found that when markets go down and when these things happen, men generally react and disinvest from investments, where women stay the long term, generally, and markets then go back up. We know they come down and they go back up. Is this one of those situations that we find ourselves in now, where you feel that things are going to calm down and we need to ride this storm? Or is this the tipping point? Is this the boiling point where this is the time now to look at other markets and to the wake-up call?
It's a huge wake-up call. It's a huge wake-up call, and it's a huge wake-up call not just for individual countries, but us collectively as Africans. In fact, just as we know that many of our countries have an enormous amount of natural resources that have not been beneficiated or have historically not been beneficiated, but purely for export, it is imperative that we relook that entire model. We have spoken about it, and in many cases, you'll find good policies about it, but the investment in beneficiation, by way of example, has just simply not taken off. And instead, we will then continuously export to markets that have developed the manufacturing capacity and then re-import those very same goods. So that has to change, Ralf. And while I think this will be a massive disruption, I think above and beyond that, it really needs to be a jolt in many cases for individual countries and through their regional blocks to take a long, hard look. My fear, if I can be brutally honest, my fear is that we will abdicate this to politicians. And there will be many a trade conference here and there. There will be symposiums, workshops, I dare say dialogues.
National dialogues.
National dialogues, while certain basics are not attended to, like removal of non-tariff barriers, the leveraging of technology to make sure that we can now use digital infrastructure and investment in infrastructure digitally to break down trade barriers. So I think that is one big fear, that we will often abdicate this to politicians with respect. I say it with respect, but at the same time, the world around us will continue to shift. You will find that the Sino-Africa trade trade will deepen probably quickly, because the Chinese are very much present in our economies. Definitely India will start playing a bigger role, but we will find ourselves in the receiving end unless internally, as Africans, we're better positioned to take advantage of global trade.
And I suppose I was writing some notes down. Is it how do we position ourselves better to take advantage of global trade? And some of the things that sort of come to mind is, in COVID as an organization, we had to reimagine a new future, not now to react, but for 5 years out, and it had to be exciting. I think one of the things that I do recognize is that the West certainly has got a very good marketing and PR engine that talks about how great they are and how important they are. And I get the sense that we're not doing enough of that. If I look at things like the Top Empowerment Awards 2 weeks ago and the conference and the organizations that are doing well, exceptionally well, growing exceptionally well, SMEs, big organizations, and the amount of organizations that are doing well, but not really telling their story, not really, sharing it internally or externally. Like, is this the opportunity to retell your story, to get excited about the future, and to put across some of your accolades, to excite customers, to excite other people about what you're able to do?
Sitting at the Topco conference last week, I had exactly the same emotional and sometimes quite touching in the number of solutions that were spoken about in the various sectors. Many digital solutions for challenges faced by communities and therefore countries. And these are just not known about in a sense. they are not they are not they are not scaled appropriately. So the challenge here, for instance, is how we create an enabling environment to build scale. And I think a lot of it has to do, if I take maybe a small step back, is the view on risk, the view of risk. Attending a G20 and a B20 subgroup meeting recently, that question did come up. When and how do we as Africans view risk versus how others view risk on us? So you have global rating agencies that view most of our economies in a particular way, and they give them ratings. And therefore, the kind of debt and borrowings that those economies can get into, as by way of example, is guided by those global rating agencies.
Yeah.
So the risk premium of Africa prevails. And I don't want to lose this point because it's quite important at a macro level, even for trade enablement, that the view of risk in Africa has to be revisited. And that is a responsibility of not just private sector, but also public sector to reposition our varying and various African economies in light of the risk that currently happens. So in other words, that also contributes to the price parity that we see, or the price pressures that we see in our economies. It's because there's a risk premium. And this invariably drifts into how banks then view loans and advances to ordinary customers, to mid-size, as well as large corporates, because of a risk premium based on first a sovereign rating that then flows into the balance of the economic players in most instances. So I think one area that we shouldn't lose sight of as we comb through these many challenges as to how to reposition ourselves and build resilience is how we reposition our risk, our view of risk, and the view of risk on us. And again, that goes back to how well developed our economy's infrastructure, financial systems, management of inflation, management, monetary policies, and also volatility of our currencies.
I agree with you. I mean, risk is a big thing, and premiums on risk can make the difference between profit or not. I think we need to move on to the next slide, Dr. Terence. If we can go to the next slide, we've got to get through these slides quickly because we do have some questions. I see the questions loading in, but maybe if we can just go quickly through the rest of the slides and get onto some of these questions, if you're okay with that. So these are just some of the tariffs for South Africa and some of the other countries in Africa based on the US policies. Again, it's just reinforcing the point that this is the boiling pot. Actions needed. Dr. Terence? Are you there? I think he's just coming on board. If you can bear with us. Here he is again. Hi there. I was just saying that obviously this is some of the tariffs that the US is imposing. Some have changed already, but I mean it's just reinforcing the point that this is the boiling pot. We've got to make some changes now. If we can go to the next slide. So I suppose we've spoken about a lot of these things.
Yes. I've touched upon some of the regional blocks and the trade diversification that we need to diversify from Western markets.
Yeah.
Maybe we can go to the next slide. Maybe we can talk a little bit about some of the banking sector actions.
Yes.
It would be completely unbecoming to invite a bank to and not talk about banking sector actions.
For sure. Do you want to run through that quickly?
Yeah, so again, under the banner of what we can do as African economies, for us coming from the banking sector, what we are looking at already, and it's happening, is what role, catalytic role we can play in funding the productive sectors like the agribusinesses, manufacturers, and logistics companies that reduce the import dependency. You would have heard as we released our results as Nedbank last week that our revisiting of our Pan-African strategy does inter alia involve looking at how we look at East Africa. It's the markets that we understand, Kenya, Tanzania, Uganda, Mozambique, and the trade that is happening between South Africa and those countries is quite vibrant. And so we want to make sure that we play an enabling role as the bank in looking at how we follow our clients, support our clients, bring some kind of financial support to their clients so that we deepen the markets and deepen the trade. Another key one very quickly is SMEs. We now know that by and large, SMEs drive most of these economies on the continent, but they are extremely the sector is underdeveloped in its ability to play a meaningful role in most of these economies. And so as banks, I think we have a crucial role to focus on those small and medium enterprises. One, just from a financial inclusion perspective, in other words, ability to make payments, receive payments. So digital and technology will be critical in that to enable payments and settlements. And then, of course, management, because now we're talking more regionally, management of the Forex volatility, so that what I am exporting from Malawi to Mozambique is not subjected too much to volatility between the Kwacha and the Mozambican Metikash, for instance. So banks play a massive role, are going to play a massive role in also warehousing some of that risk, being able to manage and cushion some of the volatility that our customers face in building trade routes and deepening trade in intra-African trade.
Yeah. I don't know if we want to go to the next couple of slides quickly. We've got a whole lot of questions that I see the audience are wanting to ask, and we're running out of time. So
I think I've spoken ad nauseum on digital infrastructure investment, so we can just go to the last slide, which really talks to what I thought would be important to talk about, which I thought I've already mentioned about the view of credit and credit risk, and how that needs to evolve.
yeah. And I suppose the question is, how can organizations show up for organizations like Nedbank? So how do they need to show up to make it a desirable, attractive offering for you to invest in them and to offer them lines of credit, I suppose? What are you looking for?
So from the bank's perspective, we are a full service bank. So everything from large corporates, listed entities, to small and medium enterprises, including micro enterprises, we will service. What we typically look for in many cases, at the very least, viable business plans and a strong management and a market. The ability then for us to work with you to deepen or to develop your business will depend on how well you are able to manage your business in the first instance, but then also manage your interface with us in servicing of debt and building a good credit profile. It is not true that banks are just willy-nilly turning people away, saying they're red listed and therefore their businesses. Otherwise, the economies would never develop if that was the case. We do take deposits, and therefore we are duty bound to make sure that as we lend money, we lend so responsibly under the various regulatory regimes across the continent. And for us, any idea that is worth pursuing, we will pursue it with you and make sure that even if it might not be a polished diamond in the beginning, by the time it goes to market, it'll be worth its weight in gold.
I mean, is it true? I suppose in many ways, like the relationship you have with Topco, it started small. We had to show up, we had to demonstrate that we did the things we said we were going to do, and then that relationship has grown and grown and grown, and 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 making sure that both parties are invested in the relationship. Is it that as well? Um, I mean, sort of like we co-create things now together. Is that the sort of relationship that maybe business owners have got to expect, not one way, not that you're just a one-sided organization?
Absolutely. Uh, well, as I've mentioned, Nedbank is a heavily regulated uh, entity, and we cannot lend recklessly. So come and we manage the risk together. As you said, the idea was the idea that Topco is this amazing entity that's going to do one, two, three. We accepted the principle and then evolved together. And I suppose, like with any relationship that's founded on solid ground, it's easier to manage over a longer period of time than if it's a one way expectation. So from the bank's perspective, and just very quickly, my experience on the continent and in doing business on the continent, what you would find that outside of maybe the main centers like Cairo, Lagos, and Johannesburg, the big opportunity lies in the SME sector. And that SME sector will drive these economies. And we are keenly focused as Nedbank and are organizing ourselves, positioning ourselves to take bold steps to support SMEs to grow their businesses and flourish
Yeah.
across the continent and grow that interconnectivity through intra-African trade. By and large, in many of these economies, you will not find many large multinational corporations like you might find in South Africa. You would find many family-owned businesses, but turning over significant amounts of money. But in their character, they are mostly family-owned, but have aspirations to grow beyond their own local borders, and we will support them.
Wow. I want to get through one or two of these questions, Dr. Terence. You have been amazing so far. Thank you so much. Um, Anonymous asked, can I meet or have a one-on-one session with both Ralf and Dr. Terence? Well, if we know who you are, we can consider it. So, Mashik asked, how can Africa overcome intertrade challenges as we see most or all African countries still depend on countries outside of Africa? The US tariffs is a wake-up call, I guess.
Yeah, you'll recall at my panel discussion at Topco, the first line out of my mouth was belief in ourselves as Africans, belief that a product that I can import from Zimbabwe will be just as good as one that I import from China. Belief in that the product that's produced in DRC or in Mozambique uh, lands in the shop floor on the shelf of the shelf of the shops in South Africa is just as good as one that says made in the United States. So it's first us believing as Africans that we are capable of producing goods and services at a price that is competitive, but at a quality that is also of a global standard. That's the first thing. And then secondly, I think we have to leverage digital and technology infrastructure to know more about what happens in other markets. You might be having an amazing solution that's working in Kaelisha or working in
Mm.
Tembisa, but could be just as applicable in the township south of Nairobi or in a township in Lagos.
People want to get hold of you. How would they do that? I see somebody just asked the chat. How do they get hold of you? Do you have an email address that someone can send some inquiries to, one of the representatives on your team, or we can put that later on. If people want to email us in the meantime, we can forward those inquiries on to you.
Yes,
So if you do
yeah,
have
they
an,
can definitely email through you, and then you know where to
yeah,
find.
yeah. So it'd be info at Topco or marketing at Topco, one of those .co.za. So another question from Anonymous is even though the infrastructure is almost non-existent, but one can use the opportunities to coastal countries by using the ports. Will you recommend this approach to export from SA?
Absolutely. The challenge there being our ports in South Africa are congested as it is. just keep that in mind. We've had our own wake-up call with respect to our own disruption in logistics when we realized that, for instance, the mining sector could not get its ore out of the ports because they were congested, and there had not been any infrastructure development in Durban, Richards Bay, Mossel Bay, Cape Town to a certain extent. And we saw a lot of traffic being diverted to Maputo, to Beira, to Walvish Bay, because our ports are already congested. But the answer to your question is yes. Sea, sea transport or sea freight is a viable option, and in many cases, slightly cheaper option than roads or rail.
Wow. Unfortunately, we've run out of time. We're very, very, very grateful for your time, Dr. Terence. So I don't know if the audience just wants to thank you or in some way say their thanks. We have these questions. We will be sending them to you and the team anyways, just for your insights. I'm sorry we weren't able to get through all of them. Hopefully, you guys enjoyed this as much as we did. We will be sending this out to those who participated. We'll also be sending it through our newsletter as well. And we're giving this to Nedbank to use for themselves as well. So thank you all for joining. Thank you, Dr. Terence, for your time, insights, and knowledge. It was hugely valuable, and I really enjoyed it.
Pleasure is absolutely mine. Good luck to everybody for trading across the continent.
Thank you.